Welcome back. It's Jared Johnson, and we're in the Ignition Series Video 3. This is exciting stuff. There's a lot of material here, and I don't want to overwhelm you with all of the things that we can look at and need to look at, but I want to just cover briefly and kind of bring the awareness to some of the foundational things that we do in trading, which is trends and patterns and basically technical analysis, how we're going to start to identify trades and entries and so on. And it's very important stuff. So I'm excited to get down to it with you. We're going to talk about trends. Trends are important because, as they say, the trend is your friend. And that's just fancy talk for which direction the market's going. We're going to talk about support and resistance and what it is, and patterns and trend lines and channels and economic news and websites and all that. It might sound like a lot, but it's not too bad. Let's get right down to it. I'm excited to cover some of this stuff. Okay, so we're going to talk about some of the time frames that we use to start to identify these trades and which direction they're going. And we're going to talk about what the definition of an uptrend is. Higher highs, higher lows. A question I get asked quite a bit, and especially a question actually that I ask quite often is, which direction is the market going? And people say, I don't know, which direction is it going? And they look and they say, it's going up. And I say, why? And sometimes I get answers like, these last three little movements, the last day has been up, so it's an uptrend. So we really need to look at which direction the market's going. It's important to have that analysis because when it's time to take a trade, we don't want to be going against the flow. It's like, swimming up the river. That's never a good idea. So we're going to be trying to find where the flow of money and the direction of the trade is going so that we can ourselves go with that flow and make money and not fight the big money and the big push that this market can give. So here are a couple of examples right here. This is a downtrend. Now, if you look at this chart right here, this is a 4-hour chart or a 240-minute chart. That means each one of these candles represents 4 hours. So this is covering a span of 3 months. That's about 3 months worth of movement. Now, if we said, what direction, what is this trend? Right here you can say, well, it's a downtrend, but right here we might say it's an uptrend, and right there we might say it's an uptrend, and right there we might say it's an uptrend, and right there we might say it's a downtrend. So I wanted to show this chart because what we're looking for in trends is we're looking for something very simple, and let me show you what that is. It's just the simple concept of what are the prominent swing points, or these guys that I have circled right here. This is a downtrend because it's making lower highs. There's a high which is lower than that one. There's some highs right there lower than that, and that high lower than those guys, and that one lower, and it's also making lower lows. So there's a low, a lower low, lower low, lower low. So that way we can see, okay, this thing in all of its ups and downs, overall it's heading down, which means we probably want to be trading downward. So in Forex, you can very easily, as in stocks and cryptocurrencies and so on, you can make money with the market going up and you can make money with the market going down. And that's called the long and the short of it all. So we can definitely do that. So to be able to do that, though, we need to make sure that we understand which direction things are headed. So in this case right here, again, lower high, lower high, lower high, lower high, lower low, lower low, lower low. So we've got a downtrend going, and we want to be trading the downward movements. Okay, so let's go to this guy right here. This is the opposite, and this would be an uptrend. Now, again, in an uptrend, we might think, yeah, that's headed up, but that's headed down, and that's headed down. So what does this all mean? And this is a 1-hour chart. So meaning each one of these candles represents an hour. There's a low, there's a high. There's a higher low, and a higher high, and a higher low, and a higher high, and so on. So you can see that this is making new highs every time it runs up, and it's not making new lows when it pulls back just a little bit. So that's the definition of an uptrend. And this is an example where we would want to be trading to the upside. We'd want to be trading upward. For those of you that are options traders, this would be something we'd want to be buying calls. For those of you that are options traders, this would be something we'd want to buy a put. If you're a Forex trader, we'd just be buying to open. In an uptrend, we'd be selling to open in a downtrend. In crypto trading, same type of situation. So that's what we are looking for there. Okay, so that's just a quick look at how we're starting to find these trends and determine a couple of things. Now let me show you another very simple thing that helps me determine which way things are going in case I find myself getting a little bit confused. We're going to use a couple of different time frames. Now when we're on these different platforms, I'm going to show you in just a moment, we're going to be able to look at daily charts and 4-hour charts and 1-hour charts. The two examples we looked at were 4-hour charts and 1-hour charts, meaning 4 hours per each candle that we looked at and 1 hour per candle that we looked at on that 4-hour, 1-hour chart. We're going to look at the daily chart as well, and I want you to start getting into a routine of looking at some larger time frames and then looking at the smaller ones next, but larger time frames first so that we can see the big picture and find out which way everything's going and then be able to determine which direction we should be trading. Now we're going to add a little indicator here, a moving average, to help us confirm trends. So let's go over to our charts right here. Here is the euro dollar. This red line is the 200 exponential moving average. Now, sounds all fancy and big names and so on, but it's just the 200 EMA, exponential moving average. And there's a few different kinds of moving averages, but I like to use exponential. So this is the 200 exponential moving average, and it's an easy one to add onto your chart. You go to go to indicators right here, and you type in EXPO for exponential moving average, and it'll say moving average, exponential. I add that on there. I switch my settings to 200. Done. Easy peasy. Again, I'll show you that in the video that I will have linked down below as well for the TradingView walkthrough. Now on here, what we see is, as I mentioned, I want to look at daily charts first. So here is a daily chart on the euro dollar. That means each one of these candlesticks represents one day. One day, one day, one day, one day, one day. And so as I am looking at a couple of months worth of data right here, several months worth of data, almost a year actually, I can see that overall this is above the moving average. So when we're above the moving average, the likelihood of this continuing to move higher is pretty good. And you can see that it's done that. Above the moving average, it's pulled back a little bit, stayed above. Pulled back, stayed above. And then I'm going to drop down to the 4-hour chart. How does it look on the 4-hour chart? Oh, a little bit choppy, but overall the last several weeks have been above the moving average. So that's kind of confirming an uptrend. What am I going to do on this 1-hour chart? Same thing, just simply look what side of the moving average is the market on? Above. So here we go, same kind of thing. I can zoom this out and look at a bigger picture here, but same thing, above, 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 dip down below just a little bit, above, above, above. So that tells us we have an uptrend that we're looking at. So that's how we're going to use our moving averages. We're going to look at the daily chart, the 4-hour chart, and the 1-hour chart, and we're just going to simply ask ourselves, are the candlesticks above the moving average or below the moving average? And if they're all three below or all three above, it's very safe to say that we have an uptrend or a downtrend. So above is an uptrend, below is a downtrend, and then we should be looking for opportunities to trade in that direction. Okay, so let's talk just a little bit about support and resistance and patterns and how we're going to do all this stuff. Here's a couple of examples. This right here is resistance, meaning that we've hit the same level more than once. So resistance is created when we run up here. We see this, it runs up. Now, maybe going back a long, long ways, we could see that this was, you know, a past level, maybe months ago or maybe even years ago or whatever the case may be, that caused it to turn around. And sometimes the market just turns around and we don't know why. And there's no rhyme or reason for it. So as this runs up and turns around right here, we say, okay, this is a resistance level, and how is it going to behave over here? So here we see it run up and hit and bounce off that. So we can see that this resistance is holding with that resistance. So it hits and establishes a level, and as it approaches that level again, we expect some sort of decision to happen here. It's either going to bounce or break out, and we're very closely watching this and looking for that movement. So that's a resistance level. This right here is a support level, and this means that again, this ran down for whatever reason, turned around right there, came back up, and now we're watching closely. And what happens? It hits and bounces. And it comes back, and it gets pretty close right there, bounces, but then it hits again here and bounces. And this is a support level. So support is down below. We call it the floor. Ceiling is resistance, and that's up above. That's this guy right here. This is ceiling resistance. And again, as we go down and turn around, that creates a level that we start to pay attention to. And as it approaches that level again And again, we look for those bounces or for those breakouts. But these become levels that we pay attention to, and we want to watch and see how things are trading as they go up to that. For example, you wouldn't want to, let's just go right here, you wouldn't want to try to buy into this right here and say, well, this looks like a good reason to buy. I'm going to get in right here, right before hitting a resistance level. So right before it goes up here, because up here, it could break or it could bounce, and it's pretty likely to bounce. And so we wouldn't want to buy right there. So that's why these resistance levels are good to watch. And same thing with the support level. We wouldn't try to be trading this down right here, because what happens? Hits and bounces up, and we say, okay, third time's a charm. Let's trade this thing through it, and it bounces again. So we watch these levels and we look for breakouts and look for that kind of trading to help us stay on the right side of the market. Okay, so we've talked about a little bit about some of those support and resistance levels. Let's look at a couple of channels and some of my favorite patterns. Just a few examples here. This is, again, a downtrend, right? So high, low, it's making lower lows all the way down here, and it's making lower highs all the way along there. Well, it's very useful to look at these channels, because oftentimes these markets, no matter what you're trading, currencies, stocks, cryptos, any of that stuff will just bounce in between a channel. And this is on a 1 hour chart, kind of a shorter term channel, only going over a couple of days, but this gives us a little bit of an idea of kind of our parameters and our areas that this is moving around. Sometimes when we break out above, it's a good opportunity to trade, you know, that new direction. And in these downtrends also, these areas can be good areas to get in as it approaches the top of this channel and take trades to the downside. And as it runs up to the top of that channel, take trades to the downside. And the same thing with an uptrend. This is an uptrend right here, bouncing along the upward movement. And as this runs down to the bottom of that channel, we can buy into this and trade it up. And as it runs back in, we can buy in and trade it up. And when it starts to break out of that channel, we can trade some entries that would take it down as we start breaking out of this. So definitely some good things to look for. These are channels. So we've talked about support and resistance, and an up channel and a down channel. Here is a sideways channel. We're going to see these quite a bit as well, where there's no trend, there's no direction. It's just bouncing up and down, bouncing up and down. And we're going to see that quite a bit as well. And so as you're learning to trade, this can oftentimes be stuff to just stay away from. As you get a little more experience in trading, you can start to, you know, buy some of these dips and trade some sell trades from some of these highs and trade it down, and so on. It's a little bit tricky to trade in these channels, and most of the time when I find a channel like this, it's really more of an alert to me to say, I want to trade this thing when it breaks out above, or I want to trade this thing when it breaks out below. So that sometimes can be very useful to look for. So a sideways channel. If you want to look at some more of these patterns, I will link this down below, but there's a little bit of a chart study, again, on Investopedia, and they have some really great stuff about all of these. But I'm just going to spend just a couple of moments to look at a few of my favorite kind of technical analysis things that I look for. As you start looking at these charts, this is a rising wedge, and that's where the market's running up, and it's kind of narrowing, and this is a bit of a reversal pattern. So as it runs up and narrows, we look for these kinds of breakouts right here, and we can find some great trades to trade this kind of stuff down. So this is called a rising wedge. The reverse of that would be a falling wedge. Same thing. You can see that this is narrowing in its downward movement, narrowing, and then what happens? It breaks out and it runs up big time. And so there's some really great trading opportunities once these guys start to get outside of that channel and outside of that pattern. So again, a rising wedge and a falling wedge. This right here is an example of a flag. We trade these quite a bit, and that's where there's a strong movement up or down, and then it just kind of consolidates and then breaks out and continues going. So that is a bullish flag. So runs up, consolidates, breaks out, keeps on going. This is an example of a head and shoulders pattern. This is a reverse head and shoulders pattern where you see a low, a high, a big low, a similar high as the previous one, and a new low, which was the same as this one back here. And as soon as it breaks above this level, we expect some big movements to the upside. So that's called a head and shoulders pattern. And again, if you go back to this right here, there's going to be a lot of good examples and more reading on this. I just want to kind of get you aware and familiar of this stuff. This right here, you're going to hear us talk a lot about double tops. So we looked at some of those examples of resistance, and that's also an example of a double top. Here's another example of a double top, hitting the same level twice and reversing off that level. And a double bottom. We looked at this example back here this is a triple bottom actually, 1, 2, 3, but anytime we hit those levels multiple times, it can be very indicative of something is coming. So that's good to watch. Another thing that we have to make sure of as we are kind of determining these trades and which direction things are going is news announcements. News announcements will hit the market quite a bit, and they can really cause some movement. So a couple of websites that I look at, forexfactory.com, and you can listen to financial news at financialjuice.com, 2 free sites, and they'll just help us keep an eye on some of the main news items, which are employment numbers, interest rates, election news. Basically, I would say at this point, you don't have to know how to trade this stuff. You just need to know when these things are happening and try not to be in the market. Let me show you a little bit of an example of how some of this works. We have interest rate hikes or interest rate news every month to 6 weeks. We have our central bank speaking all the time. We have employment numbers every month. We have election news too often, it feels like. And that can cause a lot of volatility. Here's an example. This is just a 5-minute chart. And this was some interest rate news from Canada. And you can see that the Canadian dollar ran in just about, this is a 5-minute chart here, so this is in 5 minutes, it ran 275 pips. Now, some of you are going to be thinking, ooh, I just got to trade just news because there's huge movements there. But you can see that along with that comes a lot of risk and a lot of tricky stuff. There are news trading strategies that I use and so on, but we will talk about that at a later point. For now, just know when those news trading items are and stay away. It's a good idea to just kind of stay out of that stuff and not get in the way, because if you have a trade that you're buying and trying to trade this thing up and it runs down that much, you could lose a lot of money. So it's better to stay out of the market when these kinds of things are happening. So just to kind of summarize here, guys, remember we're going to look at the daily chart first, the 4-hour chart, and then the 1-hour chart to find trends. Daily, 4-hour, 1-hour. Is it above the moving average on all 3 charts or below the moving average? That's an easy way to look at it. Or are they all making higher highs and higher lows, or lower highs and lower lows? Remember that downtrend, uptrend definition. Moving average will help us. We're going to look at some of those patterns I talked about, like double tops and double bottoms and rising wedges and falling wedges. That's going to help us. We're going to look at a little bit of a way to kind of find out how far these are going to go in some of that price projection. We'll talk about that in some of the coming videos. And then as far as news trading, know the schedule, proceed with caution, ideally just stay out. So I hope this was helpful. There's going to be several videos linked below, but this will get you started and going on some of that material. Thanks everybody. Thanks for watching. We'll see you in the next video.